G'day, my name's Paul Bloxham. I'm HSBC's Chief Economist for Australia and New Zealand. I'll be addressing the Corporate Governance Forum in Sydney in May this year, and I hope to see you there. Well, we're fairly optimistic for 2016. We think growth will continue, and that we think will continue to be supported by housing and the services sectors as growth is rebalancing away from the end of the mining boom. Well, business conditions are actually already starting the year out at fairly high levels. We've got business conditions that are at their highest level since the global financial crisis. And if you look across the states, New South Wales in particular has business conditions at the moment at their highest level in 2 decades. We do think that Australia's economy has managed to pull off a great rebalancing act. We have shifted from mining being the key driver of our growth towards housing and in particular the services sectors where services exports are picking up very strongly. Well, the lower Australian dollar has been a key driver of this great rebalancing of growth from mining to the non-mining sectors. A further fall in the Aussie dollar would probably be helpful to support that growth story. The challenge, of course, is the Aussie dollar does look as though it's being particularly stubborn around that 70 to 72 cent level at the moment. Well, we think it's more likely that the RBA will probably cut a little bit further this year than sit still, and a lot of that has to do with the fact that interest rates in the rest of the world are very low, and we think the Bank of Japan will be cutting further into negative territory, the ECB will be cutting further into negative territory. If the RBA doesn't cut rates further, there's upside risk to the Aussie dollar, which they would be concerned about.